everyone, welcome to my YouTube channel. My name is Tabitha, and today we are going to talk about how I increase my investment account from 22,000 to 43,000. So I will show you all the factors that contribute into that growth. And I know it has been a while. I've been away for like almost 2 months, and I have not uploaded any videos on my YouTube channel. Now I am back and we are going to start again for the year. This is the first video for the year, and I'll see how it will go. And all of this that I'm going to share today are just for learning purpose. It isn't about me, but more of what you can learn as a person and what we can learn together too. Because if you contribute your input and then me too, I can learn from you too. So you're open to comment and like this video, and if you wish you can share it with your friends and your family so they can also learn something from it. Okay, and thank you. Like I have said at the beginning that we are going to talk about that how I increase my investment account from 22,000 to 43,000. I'm just only sharing the factors and that contribute to those that growth. So if you're new to this channel, please subscribe for more videos and I will appreciate your support. So the agendas of today are pay yourself first, pay yourself first. This is like a slogan for people who are familiar with finance, and then everyone use it, and we all need also to put it in practice. And because if you have the knowledge and you don't practice, and then it's useless. So another factors that contribute to my growth in the stock market is tax return for 2021, and then also the dividend income. So I will show you on what I do that give me dividend income without me doing anything. So another part was capital gain, and then the next one, which is like currency exchange. So I have 5 factors that contribute to that growth, and if you wish to learn more about all these 5 factors, and then you follow me back to the whole video. So pay yourself first is slogans, like I say before, that is mostly familiar with people who are into financial stuff, and individual has their own way of paying themselves first. Others, they do budgeting. So they budget first and then see what is left so that they can now put it aside as saving or things that they can use for investment. Other people, they do a financial allocation. And for me, I use financial allocation because life is uncertain and you never know what will come up or what will is on the way waiting for you. So what I will do first is when I get the money, I get the percentage that I'm supposed to pay myself first with, put it aside before now I go and budget the rest of the money. So at first I will do 20% and then see if actually still left with some, and then I will do 40%. But the fixed amount or fixed percentage that I use most of the time is 20%. Yes, some people will do 40%, and when you increase your earning potential, because some people they can do two jobs, and if they have already settled their expenses and everything that they need to do, and then they can do 60% or even 40% of their income. Yeah, increasing your earning potential will really boost up your pay yourself first section of the saving or investment. The next topic was about tax return. So a lot of people everyone in Canada, they get like some room every year to contribute to your RSP, and only few people that use that. Others, they might have their own reason why they don't want to use the the the, the service, right? So they don't know why, like. Maybe they don't know how it works. Maybe the banks do not tell them how it actually works, or maybe they just don't want to put money in the RSP account because it depends on what you use the account with. Otherwise, you will be taxed late too. So it depends. So, okay. So for me, I had a contribution room for the last year, which is 2020. The previous year is 2021. It was 8,000. So when I contributed 2021, that one had on effect on my tax return of 2022. So in 2022, I got back about 5,500 in tax return because I had contributed to my RSP in the previous year. So that one also helped because that 5,500 you can invest it in something else and get you more money too. So it depends on your priorities and what you want to do with your accounts. So the next thing was about dividend income. So, as I said before, all of us have different needs, different wants, different responsibilities. But for me, in the past 2 years, I've been building accounts and I have two accounts. And these accounts, they give me dividends. So what I do, I'll go buy shares and stocks in different industries like finances, energy industries, REITs, and then ETFs. So when I buy them, some of these companies they pay monthly dividends, others they pay quarterly dividends. And when I was doing my books last year to see actually what I am doing and whether there is something that I'm getting from my accounts, so I realized that I had been paid 250 a month for these two accounts for the whole year. This could sum up to 3,000, which added back to my account. So dividend income is something that you can look into it if you want to be associated with the financial stuff, if you something that you're interested in, and then dividend account is definitely dividend income is definitely a free money. So if you have your money, it's just like your money is working for you. It's like the 250, you didn't invest any of the time inside, it's just your money. Maybe you do a little bit of research, but 250 a month, it's more money. If it grows in a year time, 2 years time, it's going to grow into something and you will be keeping up with inflation. The next thing was capital gain. So capital gain, how it works, it works different. So capital gain work different. So is some time when you buy stocks and share and you keep it for a year, the company will give you capital gain. Another time when you have money and you buy shares of the stocks when they are on discount would mean when the price has gone down, and then later on sell them at profit when the price has goes up, and then you make the profit. So when you're making the profit, so that become the capital gain. So you're getting the capital gain. And because of me, because of what I do, I keep my capital gain in my TFSA. So TFSA, so that I don't have to pay any tax on the income that I get as capital gain. Okay, so capital gain is another way to make money on the stock market. stock market. So on occasional basis, last year I would make 1,500. Some month I would make 0% because maybe the market was red or bear market, and then on the green market, that's when I will make profit because I'm still not experienced in trading the rate market. So I'll just leave it like that and they stay if it goes to red. But from the green market, I will just really be active and make capital gains from my account. Yes. And the green market is a bit easier to trade because it's just like you buying clothes at lower price and sell them at higher price. But for the lower market, it's more a bit complicated for the rate market, okay? Bear market. So capital gain was one of the factors that also contribute into the growth of my account. The next one will be currency exchange. So currency exchange is a new thing that I just started this last year because in 2021 I was not using it. But what really encouraged me to do currency exchange is my experience that I got from work. So when I was working at Cash Money last year, I was also doing transaction on the currency exchange, and I could really actually see how you can make profit with currency exchange. Okay, and also learn about factors that also affect the USD dollar currency, right? When I was at work. So when I came after the works, I came now to try to apply what I learned from my job. Okay, so when I came back, I'm now using it USD as the product, and then the Canadian dollar is the Canadian dollar is the means of exchange. So what I will do is that I will go check on Google, like how much does the USD cost. So if USD costing 1.25, and what about last time? Did it cost more? How long did it take for it to appreciate? How long did it take for it to go down again? So the products, you would buy your products, which is the USD, at the lower price, and then later on sell it at a higher price. So once I get the USD at lower price, I bought them USD. So instead of me putting them there, I would just buy dividend stock, US dividend stocks, right? So that while I wait for the USD to increase in value or appreciate in value, I am making dividend from those US dollars because every day you keep your money in cash form, you're losing it because there's inflation. Inflation is always going up, right? So for me to avoid that, I put it in the dividend stock, US dividend stocks. So in the meantime, I will be getting dividend. And then when the price of that stock goes up, I will make capital gain. And then once now I sold it and it's now in cash USD, I'll go back to Google and then check if the price of buying USD or selling USD is higher. So if I got it at 1.25 and then now is 1.38 and then now I will sell and I will make another profit. So you will benefit twice, 3 times. The dividend that you get from the USD dividend stock, and then the capital gain that you might gain if the price increase, and then the profit that you will make when the USD appreciate against Canadian. So now you can sell your USD back to Canadian and you will make profit from that. Okay, so this marks the end of the video, and I have gone through 5 factors that contribute to my account growth last year. And if you like this video, you can also like other videos that I've made before or the videos that are going to come later. So subscribe to my YouTube channel And thank you for watching, and I will see you next time.